All right, traders, I want to show you something that I don't usually share publicly. Back in 2024, I had a very mixed trading year. Up a lot, but gave back some profits, and I wanted to better understand why. So, what I did is I went through all of my trades in 2024 and the first half of 2025. Every one of them, the wins, the losses, the ones that I exited early and the ones that I held too long, the ones I didn't take, and I ran the numbers. And what I found changed the way that I think about my own trading, and not in the way that I expected. Because when I started, I thought I was going to see that my system wasn't working properly. Instead, I found that my system works great. It was the moments when I stepped away from it that were costing me. Today, I'm going to walk you through exactly what that data showed, the specific patterns, the specific mistakes, and what I changed because of it. So let's get into it. If you don't mind, take a second and hit the like button. It takes just a couple seconds on your part, and it genuinely helps this reach traders who need it. All right, let's talk about the setup. First, I need to talk about how I track so you understand what I am saying. For every trade I take, I log it in my trading journal. In that journal, I have the date, the ticker of the trade, whether I followed my plan, what my emotions were like during the trade, the outcome in dollars and percentages, and then one note about what happened and why. The last column, that note column, is the most valuable. Not the P&L number, the note, because the note tells me the story. And after all those trade, the stories were starting to show patterns. Now, after I have my trade journal and everything written down by hand, I also use TradeViz. TradeViz is an online tracking platform that is connected directly to my account, and it tracks every single trade that I take. All right. The third piece that I use is AI. I load all of my trade journal entries into AI and ask it to examine the entries and give me patterns that are seen in my trading. And here is what I came up with after examining all of those trades in 2024 and 2025. The first finding, I'm going to call it the plan versus deviation split. So, finding number one, when I followed my written plan exactly, that's the entry trigger, the stop placement, the target, the position size, my win rate was 85%. And when I deviated from my plan in any way, like I entered too early, or I moved a stop, or I sized up, my win rate went down to 70%. Let me say that again. Same market conditions, same types of setups, different outcomes based on entirely on whether I followed the process that I wrote when I was calm or whether I made a decision in real time while price was moving. 85% to 70%. I expected to see some difference, but I didn't expect the gap to be that wide. And seeing that number in black and white, it is a very different experience than knowing it theoretically. Theoretically, I knew deviation was a problem, but now that I had the data that it showed me exactly how much it was costing me, that pattern held across all of those trades with no exceptions. Every time I deviated, regardless of what the market was doing, regardless of how confident I felt, the outcomes were worse. And here's the thing that I want you to sit with. This means the problem is not the market. The problem is not my system. The problem was me in specific moments making decisions that weren't my plan. That's a fixable problem. A market problem, you can't fix that. a me problem, that I can work on. Now, before I get into finding number 2, I want to take a quick second. If this kind of analysis resonates with you, actually tracking your trade, journaling your trades, reviewing the data, building a real process, that is exactly what I plan to do with all of the members of the channel next week. Members get access to this members only session next Wednesday evening after the market closes at 4 o'clock Eastern Time. I want to make the members of Price Plan Profit a community of traders who are growing together. And the very first session is going to be a session where I walk through exactly how I journal, some recent journal entries, and taking Q&A questions from the members. All right. If that sounds like something that you'd want to be a part of, make sure that you're not just a subscriber to the channel, but you're also a member of the channel. And then come check out the first members only session next Wednesday, 4 o'clock. Now, for finding number 2, this one surprised me more than the first finding. When I went through my trades and I looked at the risk that I had on each trade versus the reward I had on each trade, they were not good. That was a problem. That was why I could have great profits, but then with just a few losing trades give back way too much of my profits. And I knew immediately that was one area that I could correct. That led me to a change. And that change is my confirmation process. My confirmation process allows me to get precision entries. Reducing my risk on the trades allows me to have a better risk to reward ratio. Meaning, if my risk is $1, I'm looking for a reward of $2 or better. But no matter what, the risk to reward has to be better than a 1-for-1 now. The confirmation process, you can find details in a video that I will link at the end of this video, but that process has saved my risk to reward ratio, which has allowed me this year to really hold on to the profits that I am gaining. So that is the finding number 2 and how I corrected it. Finding number 3, and I'm sure many of you have heard of this, it's the FOMO pattern. When I went through my trades, I had a fear of missing out. Not a fear of losing, a fear of missing a move. A stock on my watch list hadn't quite reached my entry level but was starting to move, or a name that I wasn't watching was making a big run and I wanted in. A setup that had almost triggered looked like it was going to go without me. In every one of those cases, I entered before my triggered fired. And in almost every one of those cases, the outcome was worse than if I had either waited or passed entirely. Here's what I found out specifically. All right. The math on FOMO is brutal. A cost isn't just the losing trade, it's also the winners that would have been even bigger. I was giving up on average 30% as far as if I had stuck to my plan or passed entirely. 30% of profits is a lot of profits. FOMO entries tend to have worse entry prices. They tend to have tighter room before the target and less favorable risk to reward, even when they work. What I'm big on now, and this is a direct change that came from this review, is writing the word FOMO on my watch list next to any name that I feel urgency about. Not as a signal to trade, as a reminder to wait for my entry trigger. And finding number 4, I exit winners too early by a lot. Or I did. When I went through my plan-based winning trades, the ones where I'd followed my process exactly, I found out that 4 out of 10 trades, 40% hit my first target and I closed the full position, not partial, full close. On paper, that sounds fine. I took profits. But when I went back and tracked what price did after I exited, it continued to my original target over 70% of the time, meaning I was right about the direction, right about the level, right about the setup, and I still left money on the table because I got nervous near the target and closed early. The fix that I've made, I now take partial profit at my first target, typically half the position, and I move my stop to break even on the rest. I'm locking in the win, but I'm giving the trade room to run to the original target if the momentum is there. This single change has already made a measurable difference in my average winner, not because I'm holding longer, but because I'm following the plan that I already wrote. All right, traders, here's what I actually took away from doing this review. This system works. I already knew that intellectually, but seeing it in the data, seeing the difference between when I follow the plan, when I got a better risk to reward by using my confirmation process, it made it real in a different way. The market is not the problem. My setups are not the problem. The moments when I deviate driven by FOMO, by impatient, by not wanting to miss a move, those are the problems. And now I see them. If I had to give you one action from this video, I want you to log every trade, not just the losers, all of them. The date, the ticker, the plan, or deviation, the outcomes, one note. What was your emotions like during the trade? Do that for at least 30 days. Then go back and look at the split. Put it into ChatGPT and let ChatGPT find the patterns that you might not see on your own. I promise you'll find something that changes how you trade. Now, I want to say one more thing, and I'm going to keep it short. But the reason that I wanted to start the membership for Price Plan Profit was so that I could work one-on-one, or not exactly one-on-one, but with a smaller group of traders that were really dedicated to becoming more disciplined and consistent. And on Wednesday, May 27th at 4 o'clock Eastern Time, we're going to have a special members only live event here on YouTube where we will talk all about how I journal my trades, what is included in my trade journal, and then how I use that information to make my trading even more disciplined and consistent. Inside the membership, I plan to do monthly sessions like this. We will decide together topics that you want extra help on. So if you want to be a part of that, make sure that you're not just subscribed to the channel, but that you're also a member. Otherwise, you might miss some great sessions. Now, I drop new content every week focused on helping you trade with structure and discipline. I want you to let me know in the comments of this video, have you ever done a full trade review like this? What did you find? I want to know. I read every comment. All right, y'all have an awesome rest of your week. Take care, and I will see you in the next video.